Tesla is due to report earnings next Wednesday after the market closed, July the 22nd. Last time we reported earnings on April the 29th with a surprise profit of $1.24 versus a consensus of a loss of $1.57. The stock went up $69.45 or 8.68%. Then it kind of faded back a little bit before it continued its upward move. Since the March low to last week's high, Tesla stock price went up 412% or $1,444 and some change. On Friday's close, it's still up $1,150.32 or 328%. Last time Tesla went parabolic in February 2020, it pulls back 63.83% or nearly 64% near the $350 mark. And if Tesla pulls back the same percentage on the recent parabolic move from March low to last week's high, then Tesla stock price will need to drop back to the $650 level. If we look at the pullback to support aspect, we see that the pullback in February went to a prior resistance turned to support near the $360 level. If a similar type of behavior from the potential pullback from last week's high to prior resistance, then it will be somewhere near this $1,020 level. These are just some past performance extrapolation. Doesn't mean it will happen, but it's good to be aware of these possibilities. Here's what the market is currently pricing in for Tesla's stock price to move after earnings. It is priced to move plus or minus $226.70 or plus or minus 15%. And that's based on Friday's close of $1,500.84. And that put the upside target around $1,727.54 and a downside target near $1,274.14. Let's see how realistic this price range is. After all, the market doesn't always get it right. On this chart, I have a composite volume profile for last week's price action, and we see the 1500 level is near the point of control, the price level that has the highest traded volume for the week. We also see there are a lot of support near the composite value area low. That's near the 1466 level, the 1466 level. If we move up, we see there is a high volume node near the upside projected price target for the post-earning move near the 1727, near the $1,727 level. Looking at the composite volume profile for the move from March low to last week's high, there is a potential support at the composite value area high near the $1,388 level. And if the post-earning downside move undercut the projected move, then this could be a possible support. At the projected downside target, it is at the edge of a low volume zone, and typically price reject those low volume zone. Price will either bounce from this level or will move to the next high volume area. And that leads to the high volume node near $1,207. And that could be one of the potential support level if the price overshoots the downside target. So from the volume profiles, the upside target is realistic since there is a high volume node near the level for price acceptance. And for the lower target, there is that opening gap on July 6th that could be a potential support or price rejection. Now the question is, will I trade Tesla into earnings? Absolutely not, especially with a plus or minus 15% projected price move. This is purely gambling if you happen to be on the wrong side of the move. Since earnings is a binary event, either it is positive or negative. It's like flipping a coin. There you have it, potential post-earning price move for Tesla. I hope you find this video to be informative and useful. Click the thumbs up and share this video with others. Thank you for watching. Stay safe.